But still, chatting earnings and dissecting them, Ravi Viswanathan, MD at TVS Supply Chain Solutions, joins in on the show right now. Ravi, hi, morning. Good to have you on the show. Your revenue was in line with the guidance, but margins took a hit this quarter. What were the key challenges, and how does the margin trajectory now look for the second half?
Good morning. And yes, we had a good revenue exit in H1, good growth of 11%. And if you look at the margin perspective, the integrated supply chain solutions margin has grown by 11%, and that is continuing on its positive momentum. And that's something which we have had a good trend over the last 4 quarters. On the network solution side, while the revenue went up, we had, I would say, margin challenges on the freight business coming predominantly from the Red Sea crisis. And in the Red Sea situation, just to explain it, we had what we call empty revenue or revenue which had zero margin because most of that revenue were what liners call it as a Red Sea surcharge. And that's something which comes into our top line but doesn't have a dollar impact on our bottom line. And that's something which dragged the network solutions margin lower than anticipation. And of course, the other segment in the network solution side, which is the integrated final mile, that's work in progress. The good news is that we expect to hit run rate profitability by Q4, which sets us very well getting into FY26. Overall, I would say good growth in the IACS segment, good volume growth in the freight business, but impacted by the Red Sea factor, and then the IFM continues to be work in progress. But as we look forward, the key call out is that the IACS margin should be in that double-digit range, and the network solution margin should first get back to about a 4.5, and then by mid next year, we want to get that to by about 100 basis points. So that's the margin trajectory as we look forward over the next 2-3 quarters from a consolidated revenue and margin perspective.
Most of the industries are talking about a slowdown. Logistics business is a function of how the economy moves. If the economy per se has started slowing down, and there is evidence of that, autos, cement, steel, every sector, then what gives you the confidence of growing?
I think it's a great question. If you look at our business outside of India, we are predominantly growing on the back of two things. One is what we call replacement revenue, and the other is doing a lot of in-house work to TVS SES. I'd spoken earlier about the large deals that we are participating in, which hitherto we were not maybe 2 years ago. And the large deal pipeline is very significant, and we have converted one last year and one more this year. We just announced this quarter that we have won a 2,200 plus crore revenue multi-year contract in North America. So I think what gives us the confidence is the global accounts where we are able to cross-sell effectively the capability, which is basically replacement opportunities, where we are well placed and we are leveraging the relationships that we have built over 2-3 decades. And the other is, of course, today we have the ability and opportunity to participate in the large deals, which gives us a good visibility into the pipeline. So from the integrated supply chain solutions perspective, we continue to see good, solid revenue growth in the double digit. The network is a bit volatile based on the freight business, and a lot of factors that you spoke about is very relevant in that, because a lot of export from India, we saw Q2 having a negative impact. There were empty container situation where containers were being diverted to China for the China-US lanes. So we had a challenge in that, and we have to watch the space, especially the export segment from India. But what gives us the confidence is the fact that we have a solid deal pipeline, and many of them are with what we call global Fortune 500 customers. And we have now shown over the last 4 to 5 quarters the ability for us to convert these large deals.
How much of your incremental revenue you think will come from new businesses?
Say that again.
How much of your incremental business, Ravi, will come from new businesses? I mean, businesses which you are adding.
Right. So if you look at Q2 or H1, about 285 crores is what 280 crores is what we've got as revenue coming from new business development. And we think that that number will be growing at about 12 to 15% or higher. And that's really what our opportunity is especially given the ability for us to move some of these large deals, which we have better visibility now than maybe 4 quarters ago.
Okay, fair enough. I wanted to also talk about the NS segment or the network solutions segment and give us a sense as to whether or not the macro headwinds have been affecting it, how are you navigating these challenges, and more importantly, what are you penciling in for the quarters along the line?
Right. So the network solution, like I said, has two sub-segments. One is the freight business, the other is the final mile business. The freight business continues to be volatile. The good news is that we've grown the revenues in the freight business significantly. We have seen that coming on the back of good volumes, especially outside of India. India is something which we are watching. We hope to have a better quarter coming forward, both in Q3 and Q4. So the network solutions business will definitely do better than last year, because last year was not such a great year for the network, for the freight business. On the integrated final mile, we continue to grow revenues, but it's a question of return back to profitability, which is the focus of the company over the last 3 to 4 quarters. And that's what I called out, that we have stemmed the rot. We have a good run rate exit profitability by the end of this fiscal, and that should take us onto a good trajectory getting into FY26. So revenue perspective, I would say ISCS has a very solid visibility. Network solution, the freight business is something which is volatile. We need to look at the macro and the trade headwinds that we saw some early last quarter and this quarter. So that's something which is a place to watch. And I don't want to put a finger in guessing what that number is.
Okay. And just a final word on the contract in North America, the 2,200 crore rupee contract that you guys won. By when will it reflect on your financials?
Right. So we have started the early consulting part of the business. So it will be lower revenue, but better margin, and that's in a way reflecting on a higher margin in the ISCS segment. We expect the steady state revenue somewhere after Q2 of FY26. So we expect that ramp up to happen and the build out to happen over the next 3 to 4 quarters.
Right, Ravi. Good to speak with you. Thank you so much for your time today.
Thank you so much.
Okay.
If you like this video, then like, share and subscribe to ET Now.